Okay, so the first one is a question about the Kiwi Swiss Sync and the Kiwi CAD. I haven't had a chance to send you a screenshot. I placed an order on the Kiwi, triggered in yesterday. I split the trade into three. I placed the first target just below the 0.84 level, the second target beneath 86 cents, and the third at 1.618. Is this on the Kiwi? 1.618. I'm not sure where you would have got that from, unless you're talking the Kiwi CAD. 84. The Kiwi dollar. 84. First target. Okay, I'm lost here because 84 is as a target in the Kiwi. Well, look, you said you placed the first target just beneath the 84, the second beneath the 86, and the third on the 1.618. So 86, I can see why you might be going towards that. 84, which is down here, don't know why. First is 85.51. Okay, in here, that's fair enough. And the second is at 86.92, and the third is at 89.38. 89.38. Okay. Not sure where you're getting these levels from, but this is a phase. You're either trading this as a range or a phase two. This is not a trend continuation. Don't mind you splitting the trade up, but not at all. I think that's sometimes can be good management. I'd be targeting the 50 EMA and maybe the 618 as your phase two target. Or if you're trading it as a range, then you're heading around the 80, 84 mark. Yeah, I may get out at 88.27. Would I say this is a continuation? Look, there's potential if you're looking at it in this time frame, such as the weekly. Um, you could look at it as a trend continuation, but you wouldn't be jumping into it yet because you've got this selling. This is we haven't seen any buying indication or strong buying indication just yet. On if you're looking at it on that time frame, if you're looking at it on the daily, you're we're under the EMAs. Quite literally, the 200 is relatively flat, and if you squeeze it in and look at it like this, well, it's just you've got a double bottom here at 84 effectively, and you're probably looking at a target around there somewhere at 87.15. Yeah, this had a little false break above it, but that's where I'd be sort of looking at it. Not as a continuation, not yet anyway. It hasn't broken this low, but came damn close to it. So I'd wouldn't be taking it as a trend continuation trade just yet. To the Kiwi CAD, well, we're had a little cycle underneath it. We've now tried to do another cycle underneath it, and we failed to make a lower low in this point here by several pips. I'm not exactly sure what we're looking at here unless you're trying to again trade this long off the maybe as a range trade. You're not trading it as a phase two because there's just no point. But are we effectively in a range? Can you say that? Well, you've got two touches on the top. If that's the top of your range and that's your bottom, there's potential that you could trade this as a range trade. No real oversold here, So that's a bit of a concern that it didn't get oversold, and you'll be looking at that as your extension, and it's certainly not something that I'd be looking at. I think it's a bit messy at this stage. And your Swiss Sing, well, there's great cyclicity there. Are we trading this now? Probably a little late, even though it's at the price we should be, probably would have been looking at underneath this bar here. Yeah, but there's maybe some potential on those shorter time frames. If you're looking at the targeting the 1.618, you need to see if there's any. That's 100. Let's call it 180 pips, and your stop's 120. That's not that crash hot, so you might look at trading the shorter time frame and get a cycle underneath. Another thing you need to consider is, and you might want to go to eSignal to check that, is there any major support down here that the market sort of bounced off that we need to be concerned about, and perhaps this is shying away from this full stop. Need to see how strong that is back in time. Okay. All right. Off to the emails now. The first email is asking if this is a head and shoulder pattern, or is it a deformed Siamese head, or is it too distorted to be valid? Personally, I think it's probably too distorted to be valid, but that's my view. It's not the classic head and shoulder pattern that you see. Doesn't mean that this is not valid. Certainly could be a valid head and shoulder pattern, but it's head and shoulder patterns are, as we know, trend reversal patterns, so that it would be reversing this uptrend. And are we looking at getting short here? No. Your neckline's up here. You're looking for that retest of that neckline, which I can see across here, or at least a retest of 135, which is what I've been waiting for. So either way, whether it is a head and shoulder pattern, and this trend line I've got coming here is from that monthly, whether it's a head and shoulder pattern or you're just looking for a selling opportunity based on the cyclicity and fundamentals, there's nothing available to us now. Is that a valid support line? It's not that strong, so I wouldn't be trading off that, and I prefer to be short, so it's a matter of finding a shorting opportunity. You need a momentum to creep back up towards 50, and that's what I'm sort of looking for, is that momentum to creep up, price to creep up and test this 35 level or something similar, and waiting for that opportunity to get short, if that makes sense. Okay, but that's it's a valid question. I just don't know if it's not the classic head and shoulder pattern, but it could well be one. It's just, I don't think it's the classic one. The next question is about AXI prices versus other brokers. We can see that here AXI had a low of 109.12 area, whereas other brokers had 109.40, 109.40 area as the lows. And AXI is unfortunate that they're doing or producing prices like this, that it's pretty ordinary, and we see that a lot when especially over data. The gentleman makes the case to AXI saying, your prime broker is pretty crap, and I'd kind of have to agree with them, unfortunately. But what an ECN, asking what an ECN market is. An ECN is literally the electronic network that all the large prime brokers trade on. The prime brokers being UBS, Deutsche Bank, JP Morgan, Citi, ABN, all those big boys. They trade in the what it's called an interbank market, and that's traded on the ECN. Reuters was the original ECN. So when a broker says they're an ECN broker, it's kind of bullshit, but it's effectively what they're saying is that they're getting they're not putting a spread onto your trade. They're feeding you exactly what they're getting, so there's no spread add-on from the prime broker. There is always a spread add-on. MetaTrader had a spread on because they get paid. MetaTrader or MetaQuotes, who owns MetaTrader, gets paid for every trade that goes through, and it's a minor amount. It's like 0.1 of a pip, but that's a spread. And so there will be a spread even on what Axie show compared to what they get. It might be 0.2 of a pip, but it's a spread. What they do with these ECN or what Axie call as a pro account is they then charge you commission after the trade. So at $7 per trade, it's effectively $7 per 100,000 face value, which is effectively 0.7 of a pip. So if you're getting like this here, we've got the euro, as we can see in the top left corner here, we've got the euro at 0.8 of a pip, from 60.4 to 61.8. Sorry, it's 1.3 pips spread at the moment. With an ECN type account, it might be 0.3 spread, but then they'll add 0.7 after the trade, so it's effectively you're trading at 1 pip. So the only advantage I see of trading on one of those ECN or pro accounts or what they call raw spreads is that you get the commission after the trade. And the only advantage is that it can be a taxable deduction depending on the way you structured your tax with your accountant and the company you're trading with. Okay, so that's the only advantage I see in that. It can be quite a large advantage, obviously, if you're doing a lot of trading, but you're not. It's not a matter of going, oh, I've got tiny spreads now, and I can, therefore I can, scalp the market. Well, you can scalp the market, but you've got to take into account that the 0.7, or if you're able to negotiate the 0.7 or $7 per 100,000 down to 0.5 or $5 per trade, then you're still getting a spread on it effectively. So it's just a matter of saying, well, okay, let's negotiate it down to 0.5, therefore I'm paying effectively 1 pip per trade, and when you're scalping after 5-7 pips, something like that, then 1 pip is okay. But if you're scalping and it's like 10 pips as a spread, even after commission, then that's not really worthwhile. Oh, yeah. So next one is no problem covering that. I don't mind those kind of questions because a lot of people do have those kind of questions as well. Euro dollar, looking at Elliott wave, getting closer to the trend line. It is kind of getting closer to the trend line. I mean, if you spread that out a bit, it may not look as close, but I think your trend line starts at that top. Yeah, so when it's a bit more spread out like this, you might say, well, the trend line's not that close just yet. So either way, you're looking at it like that, it could be getting closer. Elliott wave is a well documented and well followed trading method. 1, 2, 3, 4, and trading the 5. I agree with you. Fundamentally, this is all good. It's just a matter of finding and being patient and waiting for the opportunity for it to arrive. Yep. Aussie Kiwi. Well, certainly tested that 109 on Axie Trader, but obviously others didn't have that. This $1.10 area is a bit of resistance. We've got, you can see this Fibonacci I've drawn from here, gives us the 2, which pulled it up. And then there's the longer fib of that, which the market seems to be stuck between 50 and the 382 right now, which is those 2 horizontals. Yeah. So you take those red lines off and we can see that's where the market's sort of reacting to. and it's stuck in that. Ideally, you want to be waiting for it to break and then retest this 50 and then taking it long. You're asking is it possible to take a short? I believe, if I saw this correctly before. Range trade, okay. Back down to the lower end of the range around 106. Fair enough. I can't argue that. Fundamentally, I want to be long it because I think it's going up to first to $1.12, these lows here, before then going to $1.20. But yeah, you've got all the reasons there to make that argument, and I think you've got another on the daily here. Pending order we place tomorrow, post the ring high. Sell exact entry may change of price, makes new lows, 5 pips, yep, just above the support. And this is your target area here, or potentially this one. Price reacting to this horizontal is born from the major fib. We're seeing the divergence, okay. However, we're back in the area where it's in the middle of the range and price is still sitting up here. So I think that the momentum, the buying pressure that's got price all the way up here, the selling that's supposed to come out of this, price hasn't really gone anywhere. So I don't know if it is actually going to make its way all the way back down here. This could be a good area to be getting long. Don't necessarily want to get long off this kind of bar here, and I would prefer to, with the longer term view of going up to $1.20, I would prefer to be seeing it come up and retest this 50. So you're kind of looking at sort of like there. Coming back down, testing it, and then going, heading back long. Wrong one. If you know what, you get what I'm saying, yeah. And it's this area that you'd want to be looking at. Having said that, it could be coming up here to this $1.16 level here area. Yeah, I don't want to short that. I don't think there's too much in it. I'd prefer to be long it. And so be looking at potential trades such as the 1 hour, get a cycle above the 50, and we know where our target is. There's either going to be this 50 EM fib here or the 1.618. So now you're looking at a decent risk reward ratio. That's the way I'm kind of looking at it anyway. Yep. But I do like your analysis. I just think this is now worn off too much, and price hasn't gone anywhere. So that tells me that there's the sellers aren't really committed. If RSI is going to drive, and you can see that when RSI drops down to the 50, price should normally come down. When it's come up to the highs and it's pushed down again, then prices should make its way down here. Is it ready to buy yet? That's a little uncertain at this stage. Looking at this, it certainly is range bound, and ideally you want RSI to be between the 50 and the 20. I just don't know if price is going to get there at this point, and so trading it even long carries quite a bit of risk on it. Trading it short, I think, is limited. So CAD yen reversal, low bullish bar. Range reversal. Range reversal. So this is, what's your range, is 92 to 94.80. 90, this area. big resistance here at 94.08 or 94.05. We could call it 94 if you wanted. Drawn that fib, I wonder what that does. CAD yen. What's giving you? Okay, 1.272. Kind of look at it like that. That's the way I would look at it. It's a bit late to be trading this now. The idea should have been born back here when we had this ring low, and you were looking at it. It should have been sort of going well. Move. Here's a support level. Is it a reasonable level? Oh, it's not ideal. The bigger support is obviously a bit lower down there somewhere. Which it didn't get anywhere near. Oh, well, 40 pips, but that's quite a bit in this with this ATR thing. So we should have been looking back here. Now that it's growing and it's obviously clearly trending stronger as the yen weakens, thanks to Putin now trying to be the altruistic son of a bitch and saying, "Oh yeah, we're just here to help." Sure you are, mate. It's now sort of looking at the shorter time frames and saying, well, we're clearly in a trend. Let's try and participate in in the market in these kind of opportunities. Certainly some room to move in the buying. I'm kind of wanting to stay away from safe havens because you never know what Putin's going to do. And as money rolls out of the safe havens, it could be all he needs to do is show up at the those trucks, that convoy he's sending in. All they need to do is find a cache of guns or grenades or some crap in one of those convoys, and the next thing you know, the yen is rallying to the boondocks and you get taken out. So kind of wanted to stay away from the safe haven currencies, which is the Swiss and the yen, because there's so much volatility around it. And he's one week he's very aggressive, and the next week he's pulling back. He's done it 3 times now, and I don't think he's finished. As I wrote the other day, he's in Armenia at the moment. The Ukraine story is far from over. And so I'd rather kind of stay away from the yens at the moment. Euro Aussie short. Yeah, look, if we could certainly, again, this should have been looked at after this seller bar at least, because prior to that we just had an inside crap day, then an engulfing seller day, then we see the selling. So this should have been traded yesterday, and you sent this to me last night, so you should have been in there and having a go at it. It certainly kind of gets all the reasons for, except there was the horizontal. I think we looked at this on Wednesday. The horizontal was what I was struggling to find. There's no clear support resistance line, not until up there, which is the market's obviously not reacting to. That one you could possibly say is one, and then now that we're underneath it, yeah, momentum's getting down to the getting there as well, so to the downside. So you'd kind of be targeting the 1.272 at least for Oh, sorry. How long was that out? I hit the mute button, unfortunately. Um, yeah, if you didn't hear me, I was just saying that the CAD yen, my bad that you didn't have. I didn't see that you actually had the order in there. So that's good. On your CAD yen, I just noticed that you had an order there. So you now got two buy bars. You've got a reason to move your stop. I did note that your stop was just underneath this. I'm not sure if that was moving it afterwards, but it seemed a little close, and maybe an ATR. But yeah, that's. I thought you had sent it to me too late, but you obviously were all over it and got in at the right time. Your Euro Aussie, again, your stops just above that bar. We should be having it against the major resistance is obviously this here, so you'd be having it above that unless you're using some sort of ATR type formation. ATR type ATR type stop management. So this one again, you're into the trade. This trend line is showing us not much. Bullish divergence, is there? Euro Aussie. Yeah, hidden divergence. I can see that. Okay, two consecutive seller bars. The question was, to me, not yet, because you're trading yesterday. That's your first seller bar. Unless if you went in underneath this bar and you traded on Wednesday, well then yes, that's one bar, two bar. You can move your stop. If you're using a two consecutive bars in the trend rule, then this is only your first one, because this is the bar you traded on. I wouldn't have necessarily gone in underneath this bar because there was no definite commitment by the sellers. Now that we do have that, I'd be looking at. Oh, sorry, you should have been trading yesterday, and this is your first bar. Yeah, you traded on Wednesday. Okay, well then you got two seller bars. Got in a little early, a little aggressive, but you got two consecutive seller bars. You could be moving your stop to potentially above this bar here, which is 43.83, so you could be moving it at say 44.00 or just above 44.00 as a sort of potential stop. 44.50 you moved it to, which is what, just above that bar, is it? Yeah, that's fine. You can move it to that. It's okay. Right. Dollar Sing. Interesting why you got two different stops on it. Your stops should be the same place. We have a seller bar here, and you can be going in underneath that. Again, you sent this to me yesterday. So you're in underneath this bar. You'd be into the trade now. And your stops should be at the same level. I'm not sure why you've got them at different levels. Let's have a read your email. Initial trade cancelled due to inside buyer. Very strong seller, high test. Okay, entry has been set below the 50 for added protection. Below the 50 fib and the 50 EMA. Okay, so that's why it was a little lower than I would have expected. I see. Yeah, under here, rather than just underneath that bar. But your stops, why are your stops? Why are your stops? Stop loss is 40 pips. First target is 68 pips. Second target 104 pips. Third target 213 pips. Risk reward is 1.7, 2.6 and 5.3. Okay. Basically there's more conservative trade than the original, less conservative, higher risk trade. Trade management will include take price for the first target and stop management for all three trades. Once the first target has been reached, evaluation will include determination for take price for the remaining two trades. Good. It seems to me that you've got a stop loss here. I can see the order number 613 was placed before 616. So, and you've got 616 up here. The reason why I know that, that's just obviously the first number prior to this one, but I presume that this is one of your three orders, and that's just an assumption. And I'm curious as to why the stop is different. Don't mind it being different. You might be having your trade saying, well, this one's using ATR and this one's using the prop trading strategy. So I don't mind it. I want to be able to know that you're journaling the reasons why you've got different stops. Okay, so we can sort of analyze the results of these sort of things. I don't mind you guys doing whatever you want to do, really. At the end of the day, if you're making money, I'm quite happy with you doing what you want to do. And as I've said and always will say, just journal it, so then we can work, see what's going on. Okay, next one's Kiwi CAD. I've kind of covered this one, I think, haven't we? Range trade. Yeah, the divergence, RSI 6. Why is yours a lot stronger than... Why does yours look different to mine? This isn't a low... One thing, you've got divergence here. It's not actually a lower or the same low. It's not even a similar low. This is a higher low, so I'd see that as convergence, not divergence. That's the only thing I would suggest with that. It's borderline, yeah, but quite literally, if you can see, we are getting slightly higher lows, yeah. So to me that's more convergence, even with the RSI, slightly higher lows in RSI, so that's convergence. But you'd be more inclined to, yeah, as I said before, it's not ideal. There's a couple of cycles underneath. This one failed to make a lower low, so it could be a range trade, but it's not something that I'd want to participate in. I just don't see it as clearly as say the Aussie Kiwi as a range. If you're looking at it like as a range trade, that one to me is a bit clearer, because there is clearer divergence. Range trade long after ugly looking ring low, yeah. It's not exactly a ring low, this is just an engulfing bar followed by a reversal bar. So you're targeting that there, you're in the trade, it's now about managing it. You've planned the trade, you've got 100% on your trade rules, that's great. So now it's just a matter of managing the trade. So getting the stop to break even as soon as possible, and then just letting it see how it performs. Once you stop to break even, doors are open. Let's see what's he doing. Rallying, yeah. I think it's time to break out of this bloody range it's been in for 6 months. Over it. Okay. Aussie Swiss. This is the Euro Aussie, similar. Set up higher highs, yes. Above the moving averages, support off the moving averages. Trendline support. Do we really? Trendline support. I'd like to say yes. I don't know if we actually do. Depends on where you draw the trend line, I suppose. I would suggest no. Where have you drawn yours from? So to me, all I can see on here is this one and then that one, which looks nice, but it's not. You know, that's only a second touch. Potentially, even if you went to that from that one and to that one, you don't have trendline support. That one, you don't have trendline support. Yeah, so I don't see trendline on this. Oh, sorry, wrong one. I don't see trendline support on it. Horizontal, like the Euro Aussie, it's hard to find and hard to define. So it's, I think it's a little weaker in that sense. Like the Euro Aussie, you're effectively saying, well, that's okay. Unlike the Euro Aussie, to me this is a bit messy. I don't think the Euro Aussie's got that, do it? Didn't quite. It went past that. It was that May low. That's the May high. So it didn't get back to that. The Euro Aussie didn't get back to this May low like the Aussie Swiss has. So in that sense, you'd suggest that this one's a little stronger than, say, look at those lows there. It's a little stronger than the Euro Aussie is as a short setup. This one's a bit stronger as a long setup. Here we have a sort of non-committal, but it is a higher low. You could have been looking at this here. I wouldn't have been convinced by it though. Would have sort of started off with a little bit of capital, and then adding to it above this bar here. You could be leaving your stop or your entry order in because the buying intention is still there. Yeah, so that's the way I'd be looking at potentially looking at this. Um, 84. Okay, you must have this set up as a short because it's minus. Target 100 pips. Okay, it's all good. Email question. What did I just do to it? It's about the cable. Where did you put it? Cable. Back to inbox. Cable. Yesterday's bar fortunately took out the lows of May. So does this rule out any re-engagement of the phase 1 continuation? It would make it, to me, it would make this suspect. As I wrote this morning, this low was broken. So you would not be looking at this as a potential trend continuation just yet in terms of the overall. For me, there's no reason to be short the cable. You don't want to. I personally don't want to. Don't think this is yet bearish, but technically it broke this low, so that's the first sign that this uptrend is potentially over. So you could be looking at this as a phase 2 trade and taking that long, but I don't think it's strong enough to be taking it as a trend continuation long. Having broken it, that it got smacked around thanks to Carney on Wednesday night and took us all for a ride, which was unexpected by most people, and that's why you get those kind of aggressive moves, because the market is not prepared for it, and it takes it by surprise. So you get that move like that. Can you take this as a phase 2 trade long? Obviously not yet, because we don't have enough buying in the marketplace. Reasonable level here that you could be saying, well, let's take this as a phase 2 trade when the buying does appear. You've got, you could say the 2 is acting as a support as these low, these highs here, and you've got the divergence. So I'd be looking at this as starting it as a phase 2 trade, but I wouldn't be taking a phase 1 trade long until we get another cycle above the EMA. Okay, this is quite an extensive run under the 50 EMA, and it hasn't done that for some time. So there is a potential such as this here, way back in a year ago. So there is potential that this uptrend could be under threat. And if it does perform a ring high and starts selling off here, then you've literally got that break of the uptrend, because you've got lower lows and lower highs. For the cable, would I look for 2 buyer bars, or I need one more in today? So I'm not taking it off this low test bar. That's not strong enough, not against all this selling pressure. That's not strong enough for me to look at it. And I just got touched up on the other night, but thanks to Carney. So once bitten, twice shy. I need to see more buying than just this. There's nowhere near enough for me to jump in on this right now. Can you comment on Carney's speech? I watched it on Bloomberg, and my take was all good, and I was surprised to see the pound drop. I didn't watch it. I didn't watch his speech. But I read the reports afterwards, and the market took it that he's not moving interest rates. He said that there's the slack's taken out of the economy. Economy's doing well. When someone says the slack's out of the economy, it's pretty much at full pace, and so there's little room for growth, in the sense that unemployment's going to drop lower and there's going to be more productivity. The market's just going to bubble along. So he's in no effectively he's in no hurry to raise rates, because he doesn't see that that it's overheated, and so it's pushing back the dates. People were talking about the BOE having to raise rates in November, and he basically hosed that idea down. So there's no raising rates this year. It'll be sort of May next year, or that's what they're talking now, is May next year. And so people bailed out of the currency, saying, well, if there's no raising rates, let's go and find yield elsewhere, or that it's not going to rally. Once you do start raising rates, then we might get that rally then. So it's just putting it back a bit. Drop was on declining earnings, less spending. Well, wages had come off a bit in Europe, although unemployment was still strong. So there's been a few other data come out. Again, they're still strong, but not as strong as they were 6 months ago. So it's as if it's plateaued. The UK economy is plateaued at the moment, I would suggest, and there'll be some time before it gets another kick to make both the currency higher highs and the economic cycle to make and the GDP to make higher highs or grow. And until we sort of see those data coming in, there's probably a bit of selling coming into the pound, and that's what's kind of what's happened. Okay. There will obviously, what goes down must come up, and what goes up must come down. But it needs to work off this oversold. Is it going to do a decent phase 2, or is it just going to shit around like the euro is doing for the last 2 weeks? That remains to be seen. So I'm certainly not going to jump on the back of this low test bar on the cable just because it's a low test bar. I got dusted on 2 nights ago, thanks, but could be doing a phase 2. I'll but we'll just continue to monitor it. And finally, EuroCAD. EuroCAD. The confusion here is, I'm sure everybody's sort of looking at it, is the weekly here. Good strong trend on the weekly. Has been cycling. Well, it's, you're on the third touch, 1, 2, 3. You'd say either this is the third touch or the fourth touch. But it's obviously there's supportive there, and the 50 EMA, and if you do do a fib, there's also a fib level here, and it's come back and retested this. All pretty strong reasons to perhaps be not looking to short this, and that's the dilemma, because the week or the daily is certainly looking like a shorting opportunity. It's testing these lows, which is, as we see, is these previous highs. It's come back and retested that, get a low test off that, and now we get a high test. So it's kind of different signals, and that's makes taking these kind of trades as a hard decision to make. From a fundamental point of view, you all know that I like this to be short, but right now there could be a bit of a battle as to which way it's going to go, and I think the moving averages are indicative of that. The momentum indicator sitting on 42. By the time it gets back to the previous low here, effectively what I'm saying is I think it might be range bound for the next couple of days or next trading session, and may not be unless you get a decent risk reward back down to this previous low here. I don't think it'll be worthwhile taking this. The weekly's certainly indicating that there's more upside than downside, and that the daily is showing downside. So with that confusion in mind, I'd be very wary about trading it, maybe looking at it and going, okay, well, I'll just have a stop above here. Risk reward is pretty low, or you'd go into the lower time frames and say, well, I'm not going to risk all my capital on it. I'll put a stop above there, come in underneath this bar here, maybe risk 0.5% and potentially target there, and get 2 times your risk or more. Let's talk at 60 pips for 140 pips. So you risk 0.5%, you walk away with maybe 1% on the trade. It's just getting conflicting signals in time frames makes it difficult to make the right decision. The weekly chart, sorry, now I'm going to read his email. The weekly chart shows a strong uptrend, and it is on the trend line, and the 50 EMA strong resistance line, continuation of the up move. Yeah, daily chart has a decent short setup. Do you have any views? Yeah, my view is I'm staying out, because I'm not exactly sure which way it's going to go. I believe the euro is going to continue to weaken, and I believe the CAD is going to continue to strengthen. So I want to be short this, but the Canadian doesn't. The Canadians aren't behaving and doing what I expect them to do, thanks to the Muppet. What was his name? Pelosi the Plonker, ruining what I think is a good currency that should be strengthening. Longer time frame, the stronger time frame. The longer trend, the stronger trend. Generally, that's the way you go. But trends are made to be broken, and this uptrend, I think, is certainly made to be broken. So things don't always go in the one direction all the time. You can see that it's been down, now it's coming up, and now it's heading back down again. So that's the monthly. Okay, weeklies. Weekly had this nice little ring low, looking stronger, but now you've got an inside seller bar at this stage, and it could end up being a reversal bar. So it's tough, and it's hard to read. And when it gets like that, you want to sort of walk away from them rather than take them on. Is that a bull flag on the weekly? Could be. If that's the case, wouldn't as it hasn't held it, it's back underneath it. And therefore, you'd be selling it to for it to go down here. As I said, that's a tricky one. Okay, that's us for the day, for the week. I just sent a late email with the work for the faded pound trade and a few others if you have time to look. Euro Aussie. We have gone through the Euro Aussie. Yeah. Cable wasn't very nice. Euro Aussie trend continuation. So you went in under this one here yesterday. CAD Swiss, well that's the Euro CAD one, or similar. I don't know about this trend line, unless you're looking at this as a channel. I'd be a little suspect about that. That's your Fibonacci, that's fair enough. This one might be a little different to, I haven't got it on there, might be a little different to the Euro CAD. Just as the Aussie Swiss is different to the Euro Aussie. And Aussie Swiss was, I think, a stronger setup than the Euro Aussie. This one has been in a, we know, a beautiful downtrend. We traded that a lot. But just looking at the monthly there, strong uptrend, high test, low test. I think people are saying, well, it's this downtrend is pretty strong, and however, as I said, all downtrends do have their day and they do get broken. That's that trend line there, had the cycle above it, and now you should be looking at buying opportunities. However, what we're not seeing here is really strong buying. You might have been going in after here, then we get a engulfing bar, then an inside test bar. So if you're in this, you're not moving your stop just yet. But this is not exactly bullish, but you could have gone in on that with the sort of starting the trade. Maybe looking to add to it afterwards. Like the Euro CAD, I think fundamentally this is the right thing to be looking at. And I can't see if your order is in there. Doesn't look to be in there, but it should have been in there a day or two ago. 83.25. Should have been above this bar here, so I've been looking at 83.20, 21, and we're now at 83.14. 83.25 would have been triggered in clearly by this bar here. Are you going to go above this bar? maybe. You know, again, for that you need to say, well, is the risk reward in it? Do I have the potential to make, you know, some sort of 100, let's call 110 pips, 200? So you're going to get a decent risk reward on it, even if you're looking at it above this bar. Going in above that one there, you're still going to get a decent risk reward on it. And the Euro was a year in, and it's a reasonable assumption to do so. I couldn't find a strong or any sort of horizontal there, but it's gone below this low here, so it's now just about managing the trade. But that should be again a reasonably profitable trade. Euro Kiwi. One, two, three, fourth time. Looking forward to the Bledisloe tomorrow night. Although it's going to be bucketing down in Sydney, so it's going to be a pretty non-exciting game. Not as exciting when there's a dry paddock to play on. Kiwi. Look, if you're looking at the cyclicity of that trend line and say that's what it's doing, then yeah, there's a potential trade. There was a potential trade yesterday. But if you're going off the moving averages, then no, there's nothing there. So yeah, it's rather messy to me. I'm certainly not ready to buy that because there's no indication for that just yet. That's probably a Tuesday trade. And if you are short, if you're looking to get shorted, it's too late on the daily time frame, because you should have been trading underneath this bar here. Yep. Am I coming down to Sydney for the Bledisloe? No, it's my father's 70th birthday party tomorrow. So, being 70, he might be asleep by the time kickoff comes. I shouldn't say that. No, he'll be up for it. He'll be watching it. We're having a lunchtime party for him. So you guys have a lovely weekend. Could you explain why there is a difference between the fib expansion tool and its level and the fib retracement tool we normally use? Well, they're two different tools. Alright. Even if the levels set in the expansion tool are the same, they don't give the same results. No, well, it's how you use them. Alright. So with the fib, we use that as a retracement, right? And we can see that it's the 618 is holding it nicely. We also use fib as an extension to say, okay, well, 1.61 is offering support. We'll measure that phase 2. The fib fib expansion tool. It operates differently. You got to go 1, 2, and then you can see that we get a third, which we need to drag up here. All right, so 1, 2, 3. We then, if you need to come in and properties, Fibo levels, you need to put in your Fibo levels 1.0 and 1.618, but it's measuring differently. Okay, so your 1.618 is down here, but it's taking it off a different measurement. So it's a different tool, effectively. So that's why it's giving you a different result. If you want to use the expansion tool and you find that it reacts more to that, then and make that as your argument, go for it. I don't mind. Just be uniform in your approach and record it. Next gen on MT4, if you want to use it, go for it. I don't find it useful at all. It's just a marketing gimmick. MT4i, which is what's driving next gen, is great for statistics, and that's about it. I wouldn't be, there's not much else in there. Correlations, well, you know what the correlations are. What else has the MT next gen got? Well, they got market manager, mini terminal. Don't need that. Sentiment trader. That to me, I don't care what other traders are doing. Correlation matrix, I know what is correlated. Alarm manager, that might be helpful. But to me, it's just the whole idea is just marketing. I don't see any real tools in there. Okay. Right. I thank you for your time, and I shall see you Monday, 10 o'clock.